Well, 2021 is an unknown still. We have the second wave coming, and the full impact is unknown. Obviously, there's great optimism around the vaccines, and also the fact that we have knowledge about that we can, in fact, shut down our economy, shut down our society for a period of time to control the pandemic, which we didn't have back in April or May. So, with that said, I have cautious optimism about our future. And here at Crombie, we're approaching things in what I would call a balanced approach. We are honestly preserving as much liquidity as we can through the next 6 to 12 months. We have commitments for our major development program and commitments with our major anchor tenant in Sobeys. But importantly, we want to have a lot of dry powder just to be resilient if things go poorly in terms of the global economy. But importantly, we're looking forward to growth, and we're in a very envious position with our major anchor tenant being an essential service, performing exceptionally well. And then Crombie also, our developments, we have 600 million of developments completing in the next 12 to 15 months. And we want to see those through to completion because they create a significant amount of NAV growth and AFFO growth for Crombie over the next number of years. And they are great projects. It improves our portfolio. So we'll continue to do those things as well as entitle land, which ultimately leads to further growth. And so we're cautiously optimism, but in a balanced way, that we need to ensure we're very strong in the event things go in a negative direction, but in also being able to take advantages of opportunities as they arise.
So we're very, very excited about 2021. I think the knowledge that the American election is behind us, that we have a vaccine that's going to probably by the second and third quarter be available to all, gives us optimism that things will get back to a point where we can move on with business. It won't be the old normal. There's a new normal. There's a light at the end of the tunnel. The uncertainty that we have will continue, but it has created opportunities, and we are becoming more creative and innovative. There's new fertile terrain for us to go and forge ahead in. I think this is the rarest of opportunities for our industry to reset and accelerate in the areas of e-commerce, prop tech. I think we're going to do very well in those areas. But the one thing that's really, really key right now is that we are all faced with a shift in consumer behavior. This is a time where this is a drastic change. There's a fundamental disruption, and it has impacted every single industry. The supply chain, manufacturing, arena sports, higher education, fashion, and this impacts every asset class. And so we need to be innovative. We need to respond to this. And I think we are set up to do that. I think it's just an accelerator of what we were doing. And we're going to make that shift. I would say to you, cautiously optimistic, as always. There is sort of this feeling that there's a glimmer of a little bit of inflation, which could move rates potentially, which may impact our business a bit, but not very much. I think the opportunities still will lie in industrial and multifamily, even though multifamily is facing some friction right now. I think that if we can get back to immigration and foreign students coming back to university, I think we can be well on our way. Overall, I think by the end of 2021, there will be sort of a slow growth, and beyond that, we will start creating some momentum and move forward.
So how do we see 2021? It's hard to know what we see in the next 2 weeks, but one thing that is consistent through our thinking is that this pandemic will end. The vaccines are around the corner. We're getting much better at treating those who are severely ill. And as a result, we do feel that there are opportunities in the future for us, good opportunities. For the most part, the institutions are sitting in the sidelines or all herding into industrial or multi-res. And we can play a little bit against the crowd. Number one, we like office. We believe that office is here to stay, that companies absolutely need to work in an office environment. While flexibility is a fact that we will deal with, companies will not be 100% work from home, nor will they be 100% in the office. And we also see a de-densification trend As a result, the net equilibrium on the absorption of space, or the amount of space occupied by companies, will be about where it is when all this settles down. As a result, we're actively pursuing this asset class. And the other one, which is the beaten up asset class, is retail. And frankly, retail falls in two categories. It's needed, and if it's needed, it's trading at pretty attractive yields. And if it's not needed, for us, well, then it shouldn't exist, and it becomes a land play. And as developers of mixed use and multi-res properties, that is an interesting opportunity. And then that is fueled by three important factors. Number one, interest rates are low, extremely low, and that seems to be the case for the foreseeable future. Two, our governments are committed to over 400,000 new immigrants a year. And then the third, all of this government spending and stimulus is going to bring back the economy. So as a result, we're there. We have capital. Our partners have capital, and we're very actively looking at opportunities right now. So in the whole 2021, a year to invest, a year to be somewhat optimistic, and this pandemic will end.
We are optimistic because it's in our nature and because we have a duty to do so. Being in real estate implies big investment, but also long cycles. So the site that we analyze today and the site that we plan and the project that we're thinking today will probably build in 3 or 4 years, if it's not more. So we have to be optimistic that in 3 or 4 years, the sanitary crisis will be behind us, and that all the fundamentals that were there before will be back eventually. So we have to be cautious, but cautiously optimistic. So we have that vision that eventually Montreal will be back to thriving as it was before the pandemic. However, the state of the downtown core is a major concern. It is deserted, workers are not there, telework is being overly praised, businesses, commercial space are suffering, and most importantly, we don't see the authorities being mobilized and consulting and developing plan in a collective effort to ensure that in the aftermath of the health crisis, downtown can revive and prosper as soon as possible. We have to be very aware that the worst thing that could happen is a downward spiral of the devitalization of our downtown core. We have an obligation not to abandon our urban center. The city is culture. It is the economic engine of our nation. It represents an obligation to counter urban sprawl. So yes, I think telework is there to stay, but I'm convinced there's a huge benefit to real meeting in person. Creativity, formation, business culture, all those informal discussions that lead to something eventually that we can plan ahead can happen behind the screen. So we have to be very careful of the long-term decision that we're taking now will probably have an effect that we have no idea right now. Trying to predict the future of something that we lived less than a year can have an effect that we have not planned at this point. So I think it's better to take short-term decision and see how things evolve and adjust as we go along.
Looking forward, I believe the industry is in a very strong position in terms of liquidity and in terms of capitalization. So the real issue is, will the distortion caused by the pandemic begin to dissipate in 2021, and will confidence begin to restore itself over the course of 2021 in a way that wasn't obvious or evident this year? I believe both will occur. I believe visibility is improving. I believe we have returned to a real world environment. It's different for now, but it is returning to some semblance of normalcy. And I think confidence is growing as a result. So I do envisage opportunity in 2021, and I do also expect a continuation of the challenges we faced in 2020. I think we're well organized and well financed in terms of facing those challenges. And I think we're well equipped to exploit the opportunities that will arise as the confidence is restored, both in the economy generally and in our specific area of business in particular.